Well, Apiam Animal Health has taken a strategic turn as it continues to face economic and industry challenges head on. And as part of that, it's appointed Bruce Dixon as interim managing director of the company. And so to detail what the priorities are, Bruce Dixon joins me now. Lovely to have you here, Bruce. Thank you so much. Just where things stand right now. So what is Apiam Health, in your view, doing really well?
Oh, look, one, we're in a very good sector. I think if you started that in the vet business worldwide is consolidating, and certainly in Australia have three major players. We're one of them. We're the only listed player. The other two competitors are private equity owned. So I think there's no doubt there's going to be consolidation in the sector as it is happening in other sectors in Australia. There's just been ultimately it will be a two-player market, and I think that's where we're heading now. And you say, where does Apiam fit? We are the only listed company, and we've got short-term. This next 12 months will simply be picking the low-hanging fruit in the business. There's a lot of upside in the business, just running the core business a lot better than it has been.
Okay, so there are opportunities. There is room for improvement. In what areas at Apiam?
I think we'll change. We've had a very centralised model to date, and we're going to change that and push the responsibility and the autonomy out to the clinics now. So I think it's a philosophical difference. So we'll run a very tight, small head office and give the vets out on site far more power and autonomy.
So that speaks to operational efficiencies. So there is more cost that can be taken out of the business?
Yeah, not cost per se. It's more on the revenue side. It's a lot of clinics underperforming because lack of revenue. It's not on the costs. It's the cost is head office. Yes, that needs to be looked at and addressed, and will be, and we're in the process of that now. But it's more on how do you lift the revenue out in the field, and that's what the focus is on. So particularly the bottom quartile of the business, and our aim is to lift that performance up to a 15% return on capital. And it's there. There's no structural reason. It's a matter of getting the right marketing in place and conversion of inquiries. And there's a myriad of reasons why we're not there, but very fixable.
Right. And when you think about margins, I mean, are there levers that can be pulled to help alleviate some of the margin pressure in the business?
Yeah, I'm not sure I'm a believer in that margin pressure in the business. That has been our underperformance. That's why the margins sit where they are. The business is growing. If you look at just the clinic business, it's growing about 6.5%. You know, in another world, I was involved in pubs, and that even in these tight conditions, that market is growing about 8 or 9% per annum. So, and this business kind of replicates a lot of that. So it's the margin will come out of course, head office rationalisation, but just lifting the revenue in the business out in the field. It's all there. It's a matter of it's a revenue, not costs, and that's where your margin will come from. You should have in this business an overall margin of anywhere between 20 to 25% EBITDA margin in the business.
Okay. So you mentioned acquisitions earlier. Do you foresee growth coming from further acquisitions, or would you look to grow organically here?
We're organic this year, and so in 12 months' time, totally. Once we've got this business running how we want and a good core, we're definitely going to look at acquisition. You can't sit where we sit as a size company and have it in a consolidating market. We need to grow, and it will be via acquisition going forward. But this year we've got our work cut out just to make sure we're starting to return that we should, margins and the business.
Bruce, how do you see intensive animal veterinary services performing over the coming years? And I suppose, how does Apiam fit in there?
Yeah, we're the leader in that field, and it will stay. There's been some rumours in the market that maybe we'd look to sell it, but we're not. So so we're committed to it, and it's a great business. It's actually would be the highest margin business in the company right now. So it's in a really nice spot. That and the feedlot business are going well, when we call that intensive. But they perform extremely well.
How about debt, Bruce? What is your assessment of Apiam's debt? And would you look to divest assets to, I suppose, change the gearing position? Would there be a capital raise in the future, do you think?
That's just no to the last part. Our debt is far too high. There's no question. But that will change dramatically if we lift this business up and to get to a 20% return across the board or 25% return across the board if we go well. That'll take care of a lot of the debt issues. Having said that, we're not in the market for acquisitions anyway. So no capital raising. Look at it next year in 12 months.
And finally, you were talking about consolidation in the industry, the broader industry. There have been rumors that Apiam itself could be a takeover target. Are you entertaining talks, or is that not the focus now?
No, it's not the focus. The phone does ring pretty regularly, to be honest, and the private equity boys are obviously on the radar there. But the answer to them and to the market is simply we've got too much really good low-hanging fruit to be had. So why would entertain these talks when it's going to be we believe a relatively straightforward plan to lift the profitability. That will then take care of debt levels because we can pay down debt and things. So too early to entertain any of those sort of talks. Having said that, we're a public company, so we're always for sale. It's just price, isn't it? But we think the current share price is ridiculously low. But that's for us to prove to the market that we should be a lot higher.
Yeah, so the next catalyst, I suppose, to turn that share price performance around, you're looking at this strategic repositioning of the company, the turnaround, you could call it, over the next 12 months. Do you reckon, Bruce, that's how long it might take?
Look, we think we'll do it well and truly quicker than that. The good part of coming in, and I've only been in the chair, literally weeks, but got some great staff, and you come in and you're not too sure about a business, but really got some good vets out there, and just need some confidence and leadership to understand what markets want, and that there's a whole lot of things behind all that, but there's no structural reason why we can't achieve what we're doing. So yeah.